Moving average is one of the oldest and most powerful indicator ever made. Not just because its simplicity, but it actually shows you average price of a stock, and it even shows the direction of the trend. You might have seen some business news channels get excited when price crosses the 200-period moving average, because it can indicate a start of a new trend. But like I said in my Ichimoku indicator video, the indicator that are easy to understand can be difficult when it comes to executing trades with it. If stock and forex trading was easy, everyone would have been a millionaire. The moving average crossover strategy is simple, but there are a few challenges you may encounter when executing trades with it. Let's see what are they and how to avoid them. Once we actually understand how to use the moving average crossover strategy properly. Like always in my next video, I will test this strategy 100 times to find its real win rate. I've already tested many other indicators 100 times to show their real win rates. If you have not watched those videos, go watch now. And subscribe to the Trading Rush channel to see this moving average strategy and many other strategy tested 100 times. After all, you don't want to risk your money on something that doesn't even work. Here's how this famous strategy goes. Moving average crossover strategy consists of two moving averages. One is a 9-period moving average. Another one is a 21-period moving average. These moving averages can be simple moving averages, but I recommend using exponential moving averages, since they will react to price quickly. If a big candle appears due to some news, exponential moving average will react to this quickly than the slow SMA ever will. It's because exponential moving average gives more priority to the latest candles, unlike SMA, where all candles are given equal priority. On this chart, the yellow line is the 9-period exponential moving average, and blue line is the 21-period moving average. When the 9-period exponential moving average crosses above the 21-period exponential moving average, it is considered as a buy signal. Similarly, when yellow line crosses below the blue line, it is considered as a sell signal. You don't necessarily have to use 9 and 21-period moving averages, but it is recommended since most people use it. And since most traders use this setting, they'll buy over here. If you use a different setting than what most traders use, you will buy somewhere else, which can be good move, but not always. So use the settings that majority of the world uses. There are multiple ways to set the stop loss in this strategy. Once you enter a long trade, you can set the stop loss below the swing low, or set it just below the crossover of these moving averages. Remember to give the price enough room to wiggle around, otherwise your stop loss can get hit. In a long setup, if you set your stop loss below the swing low, there is low probability of price hitting your stop loss. But then price have to make a big move up, so you can get a good risk to reward ratio. On the other hand, if you set your stop loss just below the moving average crossover, your stop loss will have a high chance of getting hit, but also will have a higher chance of making a big move up relative to your stop loss. In other words, you will have a good risk to reward ratio. Okay, now let's talk about the profit target, something every trader loves. But where should we set our profit target in this moving average strategy? Just like the stop loss, there are different ways to set profit targets. Some use a fixed target. For example, some will set their profit target 2 times more than the risk. This way, they will only take 200% profit. Nothing more, nothing less. This is a good strategy to get consistent profit. On the other hand, some will take profit and exit the trade when another moving average crossover is generated. This way you have a chance to stay in a long trend for a long time. This strategy can generate great risk to reward ratio, but market doesn't make big moves every time. These both methods have their advantages and disadvantages. It really comes down to the trader's personality. If you can stare at the screen for a long time and keep adjusting your trade, go with the second method. If you cannot stare at the screen and see your profit loss changing, go with the first method. That way you don't have to adjust the trade. Just set your stop loss and profit target and go for a walk, or maybe look for another trade. Just remember to cancel your stop loss when your profit target order hits, and vice versa. Let's see some examples first. and then I will show you a way to filter false signals generated by this crossover strategy. In this long setup, the 9-period moving average is crossing above the 21-period moving average. Our entry would have been at the crossover, and our stop loss would have been at the swing low, or just below the crossover. If you would have used the fixed profit target strategy, you would have exited this trade right here. Otherwise, our exit signal was this crossover. Here's a short example. The yellow line is crossing below the blue line. Our entry would have been at the crossover, and stop loss above the swing high, or above the crossover. For profit, you would have exited the trade at the next moving average crossover, or at your fixed profit target. As you can see, there are quite a few signals that did not work. In other words, these were false signals. As I always say, no strategy works 100% of the time, but we can try to reduce the number of false signals and increase the win rate of this strategy. In this strategy, to filter false signals, we will use the 200-period exponential moving average. You can use SMA2 if you want. We will use this 200-period moving average to find the direction of the long-term trend. Remember, trend is your friend. Always take trade in the direction of the trend, especially if you are new. If the price is above the 200-period moving average, we will only look to buy. And if price is below the 200-period moving average, we will only look to sell. So, here's how our modified moving average crossover strategy goes. When price is above the 200-period moving average, and we see the 9-period moving average crossing above the 21-period moving average, we will buy as soon as the crossover happens. Similarly, when the price is below the 200-period moving average, and we see the 9-period moving average crossing below the 21-period moving average, we will sell as soon as the crossover happens. Now let's take a look at some important points and mistakes that you should avoid while trading with moving average crossover strategy. Number 1, to increase your chances of winning, take trades that are near the support and resistance. I've already made a video on how to draw support and resistance like a pro. Check that video out if you are new. In my last video, I showed you how I was able to make 1000% profit using simple support and resistance. So use support and resistance with moving average crossover to increase your win rate. Number 2, don't take trade if the entry signal candle is far away from the crossover. If the price makes a big move and then you get an entry signal, do not take the trade. Your risk will be too much, and win rate of that trade will be low. If price has already made a big move in one candle, how much higher you expect it to keep going? Only take trade signals that are near the moving average crossover. This way you will get better entry and will have a higher chance of getting good risk to reward ratio. Number 3, this strategy, just like most strategies out there, works best when market is trending. In my previous videos, I showed you how to identify if the market is trending or not, using the ATR indicator. Check that video out if you don't know how to identify a range market to avoid losing money. Range market is where most traders fail and blow up their accounts, because most strategies stop working in a range market. If you manage your money first and gain experience, you should be able to identify trending and ranging market without using any indicator. That's all there is to it. In my next video, I will test this strategy 100 times to see if this strategy is profitable or not. Subscribe to the channel if you want to see it.